Welcome to another edition of the ARMR Report. I'm your host, Brett Rosenthal. This is a show about quantamental investing, which is a combination of quantitative execution and a fundamental foundation. Together, those two things create the information edge that I share with you guys on this channel. Now, tonight, what we're going to do is we're going to focus on the quantitative side, where we're going to look at two day trades from today. We were short the NASDAQ 100 and the small cap index. I'm going to walk you through how we did that. For those of you who are not part of the ARMR Report insider crew right now, consider subscribing down here. You can see it's the armorreport.com, ARMRreport.com. These are two trades directly off of our trading desk. So ARMR insiders watched step by step today as we put these trades on, where we booked profits, and the reasons for it. Okay, so if you're looking for a real-time process, consider subscribing. Now, having said that, let's dive right in. You're looking at a screen of four of the major groups that we look to trade every day. This is the Precious Metals Index, GDX. This is the Dow DIA, and here are the two trades from today. So I'm just going to blow them up. We're going to start with the NASDAQ 100 trade. Okay, so what you're looking at here is our algorithm on a 3-minute chart. It's called the Price Movement Profiler, the ARMR PMP. All of these lines mean something. If you want to understand it, I'll give you a quick rundown. We have an opening range high and low. That's the red and green line. Then we have Fibonacci extensions below and above, 1 through 4. We have here this teal line, which we call the ARMR average true range of the day, the average true range high and low. Okay, the high is up here. Now, all of these tools you can find on your own charting software that you use, but please understand when you look at this data, our algorithm infuses these off-the-shelf tools with a volatility component, which we feel makes it a lot more effective. But you can certainly follow along and use some of these ideas on your own by simply using Fibonacci extensions from an opening range, by using the average true range highs and lows. This will immediately make you a better trader, even if you're not using exactly the tools that we use. The black dotted line here is the volume weighted average price. Again, this is an ARMR VWAP. And we share this information in the ARMR Slack trading room all day. Okay, so we take our ARMR PMP and we share price points with our subscribers. So what you have here is, I just wrote it out for you. We put a short on the NASDAQ right on this bar right here. All right, now, one other thing I wanted to share with you before I move on. So this was the bar that we got short. Okay, in fact, why don't we change that to, I don't know, green, make it more fun. All right, this purple dashed line right here, if you guys can see that, okay? So what we're doing here is we're overlaying options gamma information. I can explain that on another night when we go over perhaps an ARMR educational video. But for the sake of this conversation, it's a key location on the chart. And in the ARMR Slack trading room, every morning we have an 8:30 meeting. And what I do is I share with the room what are the key gamma points that we'll be looking for reactions off of those locations. And that's really how we like to trade on the ARMR trading desk from a day trading standpoint. We look for locations, then we look for triggers at that location to put positions on. Okay? So what we see here is the market obviously is up at the open, okay, then it fails, breaks below the VWAP. Every now and then there'll be a day where we actually short the break below the VWAP. But not this day, because all it did was bring it right down to the gamma location, which was 290. Okay, we all knew that first thing in the morning. 290 is the key level. Let's see how it behaves at 290. Broke below it. We don't trade the first breakdown below it, because very often it's going to challenge it, which it did. Right? So it breaks below, challenges it back up. If you put the trade on right here, you get stopped out as it challenges. Okay, so what we try to do is avoid that type of action. But the second test is the key. And that was this breakdown right here. That's where we get short. All right, and then we have targets on the way down. One target is always going to be the prior closing volume weighted average price, or VWAP. So we're going to book some profits, which, by the way, we love confluence on our trading desk. When we see more than one important piece of information show up at a location, that's where we trade. So that was a target. This was the second Fibonacci down from the opening range this morning, which equaled last night's VWAP. We're going to book some profits right in there. Okay? And what we do is we begin trailing a stop. So you can see this green dot right here. Okay? That green dot right there tells us big volume is coming in as it's cratering. So that becomes our stop point. Okay? So we lower stops down. We book some profits right in here, and our stop is now here on the rest of our position. Trades lower again, we might book some more profits. We bring our stops down into here. So when it takes out right here is where we book profit on that trade. Okay? And then we had really 2 profit points. We booked profits right here, and they had the rest of our position taken out right here. The reason for that is this yellow line is 1 standard deviation below the VWAP. Typically, when a stock or an index in a downtrend closes above that line, the lows of the day are in. Doesn't mean you won't challenge those lows again, but the lows of the days are in. And so the white meat of that trade's done, and that's why we end up booking profits there. Now in this case, it tried to go higher, reversed, but really if you look, the low of the day was already in place here. Okay? We already saw the low of the day. And it really kind of closed right around the initial point, which was right in here. That's where the close was. All right? So that's how we traded that stock, the index. It was a great trade. Now let's look at the next trade. So that was we put that trade on the NASDAQ 100 at 1224. I think it was the very next bar at 1230. We decided to put on the trade of the small cap index. Now this is a little bit different. And I saw the price there, 170.98 is where we took that position, okay? It's a little different. We didn't wait for the purple line, purple dash line, that's our location. We were far enough away from that location, and what we use here is a break below the VWAP. Remember I said sometimes we would have done that in the NASDAQ 100, we didn't do it, all right? We did it on this bar. We love confluence on our trading desk. I would not have put that trade on in a vacuum by itself. But when we see the NASDAQ breaking down below a key gamma location, we look over to what's happening to the small caps. Yep, they're violating the VWAP. Put the trade on. And on this bar here, not only does it violate the VWAP, but it also breaks below the opening range low. And that's one of my favorite setups. The reason I love it is the stop. The stop on that trade would have been right up here. So if we're putting it short on here, if it closes back above the VWAP and above the first down bar of the move that we're shorting, we're going to cover it. The loss won't be that large. But the gains we're looking for is a move back to the magnet, which is this gamma price. So we book some profits there, and it craters through it. Look at the green dots of volume that are showing up. Huge volume coming in as it's selling off. Bang, bang, bang. So that allows us to lower our stop, which started out here. We lowered our stop to here. Every time there's a big volume down bar, we lower our stop to the top of that bar with an offset. So if there's a reversal, we're out, we book our profit. If it keeps pressing lower, we lower our stops again to right in here. Now, notice please how this asset drops right down to the average true range low of the day. This is one of my favorite trades, and I always book a profit when I get to the ATR. Okay? So, see if I can get this to work for us. All right, so in case you can see this, whoops. All right, well, basically you can see right down here is the ATR low of the day. That's right in there. Okay? And so what we're looking to do is book some profits right at that teal line. It touches it, just touches it, and then reverses off of it. So we book some profits here, which is at the purple line, which we showed right here. Then we book some more profits right down here at the ATR low of the day, okay? And then we lower our stop right into this, see this big volume selling? So now our stop is going to be right in here, okay? Stop's going to be right in there. And of course we stop out the rest as it goes above this yellow line and the trade's over. Okay, now it comes all the way back down, makes a double bottom, but closes right on that purple line of gamma. And that's how I'll leave you tonight, with that thought of how important option gamma information is. The small cap literally closes on the price that we highlighted in the ARMR morning meeting at 8:30. We said there's the price that matters today on small caps, and there's the closing price. Okay? So anyway, I hope this was helpful. I hope you found this beneficial. Any questions you may have, please just write it right down here in the comment section. I'd love to answer the questions. If there's some terminology you're not sure of, let me know, and we can do an ARMR education video. Until the next time, guys, have a great day trading tomorrow. Be safe out there. Take care.